Hi, Nick. Good to see you. We're going to talk about the recent market sell-off, and I just want to start with a few of the pain points. The S&P 500 fell 8.8% for the month of April. The Dow declined nearly 5%, the worst monthly loss since March of 2020. The Nasdaq retreated more than 13%. That was the biggest decline since October of 2008. And if that isn't bad enough, let's get a visual representation. For the past week, I mean, Nick, look at all that red. This chart from FinViz, when I see numbers like this, when I see volatility like this, what am I supposed to do?
Yeah, so this chart over the last month isn't really
Month, yeah.
showing us volatility. It's showing us a lot of red inside of here. Volatility can go both ways. Volatility can be very positive for a lot of people. Volatility can also, compound a lot of losses very quickly. We see some of those big players, the Apples, the Googles, the
Right.
Amazons of the world, take big steps backwards. Those were companies over the last 10 years that have been leading the charge upwards as well. So we're going through a short period here of a little bit of a downtrend. Do I think that the companies like Apple and Amazon and Google are going to be going away anytime soon? No, they're in it for the long haul. They're going to be, a part of that. This gives us an opportunity to step back, reevaluate, where we're at in an investment cycle, and then move forward, whether that's, buying opportunities right now or holding off and being a little bit defensive at this point in time for a lower market to be able to buy at that time too.
Yeah. Okay. So we're going to dive into some of those details that you just mentioned. But according to Bank of America, they're saying the market is pricing in a 1 in 3 chance of a recession. What does that mean?
Yep, there's always a chance of a recession out there. And I think first we have to go back to what is a recession. A recession is 2 quarters of negative GDP. So is that a possibility? Absolutely. Where the first part of this year has started out at, we definitely have a chance to get there. But that is a lagging indicator as well. So we're not going to know if we're in a recession until after it happens. But the question I think really that's out there is what's the depth of that potential recession going to be? Is it going to be in this 10 to 20% range at this point in time? Or is it going to be, a 50 to 70% loss, in the markets? We don't know. Nobody has that crystal ball to be able to say exactly what it is. So once again, I think we need to kind of sit back or take a step back and look at where we're at in a portfolio construction and be defensive in areas that we should be, but also be allocated to the market in areas that do well during recessionary periods.
And I'm sure, though, that it's probably even harder to stomach for people who are in or near retirement when they see that kind of sell off. What's your advice for them?
Absolutely. So number one, hang in there. It's always very tough to go through. While you're working, these are some of the best times because you're essentially buying stuff on sale. Most people don't go to the store and say, "Hey, I want to buy your most expensive item, and I'll wait to do that for 6 months until the price goes up." Most people want to buy that stuff on clearance. The stock market, it's one of those areas that people want to buy green, not necessarily buy, the stocks that are declining. Now, you want to definitely be buying, quality items, not just going out there and throwing money at penny stocks, that may or may not make it. But overall, we need to, have an allocation that's going to be, correct for your time period in life. For those people in retirement, we're not necessarily adding money into the markets at this point in time. So we want to minimize volatility as much as we can on the downside as well as the upside and have a little bit smoother of a ride throughout those retirement years.
Mhm. I think what I heard you just kind of talking about, Nick, right, was behavioral finance, how people tend to panic and sell exactly when they shouldn't. So this is when we need to be staying disciplined and call you when
Yep.
we're worried.
Yep, absolutely. And I just sent out a quick letter to our clients, and it was talking about Warren Buffett and his idea behind be fearful when others are greedy and be greedy when others are fearful. We're getting into that stage where people are becoming despondent. People are capitulation, and people are panic selling. We don't want to have that projection out there. what, we want people to understand is we're going to go through these types of periods. We've put this, we've projected these types of things into plans where markets are down 15 to 20 to 30% and more. That's all part of the plan. We know it's not going to be an even, steady ride. But it's just getting through this time. We have to let time play out, for all things to come back to neutral.
That being said, I know that part of your job is walking people through this, especially your clients whenever they're concerned about this. So if somebody would like to talk through all these changes with you, what's the best way to reach you?
Absolutely. So you can either go online, and reach us through our website, eikenberryretirement.com. You can get our phone number, 937-498-1128 there on the website, or you can schedule an appointment with us on the website as well. So we're available multiple ways in this digital age.
Yeah, and it's so helpful. I always feel better after I talk to you. Nick, thank you.
Absolutely. Thank you, Aaron.